there's a lot going on the macro side of things. First, with this Canadian election, have we seen it playing out in the CAD at all?
Sadly not. No, I think the CAD's been trading like a 12-point range today so far. So sadly, I don't think how the Canadian election, and probably the Australian election, I have to caveat with, is going to have too much of an effect on the Canadian dollar or the Aussie dollar. I think, unfortunately, the loonie's future is going to be settled south of the border.
Yeah, we had CBA yesterday calling a recession for Canada, and actually now calling for 3 more 25 basis point rate cuts this year alone.
I think there's a good, strong possibility for that. And I think one of the things we're seeing from that macro perspective is we want to see some certainty from Trump on tariffs rather than some of the other comments we're getting from him at the moment. I mean, until we get that, recession fears and global growth fears are just going to increase, and we're seeing that in markets.
Mm-hmm. Well, he did do an interview with The Atlantic today saying that he is looking to smash things and that he's running America and the world. So really looking to leave his mark. Now, the Aussie through the overnight was buoyed by, I suppose, US dollar weakness. So what was behind that?
It was just US dollar weakness. And I think it's probably only a few short days ago we were in here and I was looking for Aussie weakness. It's still weak on the crosses, and as you can see from the technical chart, it's just approaching. It's really struggling to broach that 200-day moving average.
In the blue, right?
In the blue, yeah. That's around 64.60 now. It hasn't really touched, but we've seen a lot of consolidation around this 64 level. There's some options interest. I think from that macro perspective, it's like we were just saying. It's we want that certainty, and until we get certainty, then I think haven trades are going to continue. And part of that haven trade now is a move away from dollar. And that's kind of where we're sitting, but we're going to see more volatility on these updates. But that could change this week with more data coming through.
Well, that's what I was going to say, because there is so much data coming out in the United States. So could we see further upside if we see that US dollar or that US data falling short of expectations?
Yeah, I think so. I think it's going to be a very interesting, because some of this data that's coming through now is affected by tariffs, or certainly by tariffs perception, tariff talk. So we've got 4 separate jobs updates, as we always do in the first week of the year. And interestingly enough, we've got PCE as well. So we've got those twin influencers on the Fed. We've got jobs and inflation. If we get a consistent theme from jobs, and we kind of think it's going to be to the downside, don't we? And certainly non-farms in particular, and ADP, which comes out I think tomorrow, they've got lower forecasts. So if we do see those lower forecasts and we get a consistent theme, then it could see more downside for the dollar. Conversely, if, as has been the theme for the last year or so, jobs market in the US stays firm, then we could see a bit of a relief rally for the dollar. We also have to caveat everything we're saying, as usual, is if we do get further updates on tariffs, on trade, and it looks to be more positive and we get details, then the dollar could rally quite strongly.
Well, it's so interesting to look at how the performance of all these different currencies have gone, because I do know that sterling even is moving towards its strongest monthly gain, I think, since 2023, and quite some time anywhere. So is that, in your view, part of that narrative that we've got, capital looking for a home outside of the US?
I think so, yeah. I think, and sterling's and the UK economy in general is very attractive for some investors, as is Europe, and that's why we've seen the Europe gain so high. And that's the cable chart you're talking about. I think when we're talking about these currencies, and it's a bit boring, isn't it? But we're talking dollar weakness rather than sterling strength, because sterling certainly have had a big move down against euro over the last couple of months as well. But we're hitting these quite interesting levels on all the majors. And
so what's that red line at the top? That's the upside resistance?
That's a topside longer term resistance, and it comes from way back past the chart. As you can see, I think it's sort of like well back in 2020. It's topping out around those levels, and as you can see, we had highs back there in Q3 24, easy for some to say. If we get a firm break, and that would be with dollar weakness, I think it's an easy break from a technical perspective for cable, and especially cable, because liquidity conditions are similar to the loonie. It could go to 140 very quickly. And this week could be the catalyst that sees things like that happen.
And same story for euro, because we've seen this surge. Could that bring the ECB, bring forth further cuts?
Well, I think the issue is yes and no, because you're getting this euro strength in there as well. But they're looking. Everyone's really. All central banks are stuck between a rock and a hard place, as is the Bank of Japan later this week. They've really got to try and digest a lot of moving factors and a lot of uncertainty. So I think they have to go, and I think we've got German inflation out, which could be a real key factor for the ECB this week. But if that comes in a little bit weaker, then we've got to look that there could be another cut in the near future for the ECB. We could be looking at the Bank of England and even the Bank of Japan, where we're looking for a hike. We've got to keep an eye on their inflation data as well. They're still concerned, but they're concerned with global growth. But Bank of Japan, they're probably, and I've skipped ahead a
that's
chart
okay. Let's
already,
bring up
haven't
the
I?
yen. Yeah, that's okay.
The Bank of Japan. They've got the issues that they've still got very sticky inflation. And the difference between them is we think the Japanese are further advanced in talks with the US on trade talks, and that can only be a good thing for them. So there's a possibility that I don't think we're going to see a hike from the BOJ this week, but we could see more hawkish rhetoric than maybe we'd be thinking we were going to get. And so we could see, it's an easy call, more volatility in the yen this week. But yen's moving percentages on a day. It did another 0.9%, I think, last night to the downside on haven buying. We could see the opposite move come by Thursday if we get a more hawkish Bank of Japan.
Incredible. So last week when we chatted, we were talking about, some of the traders on the desk. Are they pulling their hair out? Are they excited by all the opportunity?
I think it depends on how you go on each individual day. You get excited by the opportunity when you're making money, and then a lot of time, if you get caught, you're getting caught in horrible markets at the moment. And even, I think we said it last week, this volatility is huge, and we're looking at charts like that, and the moves don't look too big, but it's because they're on the longer dated stuff. And like yesterday, we've got over 100 points in dollar yen, and that you're losing a few hairs. I think it's tough times for guys out there, and they generally, what you'll find on the desk is they'll have adjusted to these conditions already, so they won't be holding on to positions for too long. If it moves the wrong way, they have to get out and maybe stop reverse. And it's challenging trading conditions, is what I'd say.
Well, you still look cool, calm, and collected. So thanks for joining us
today. I don't
today.
have to do it anymore.
Yeah, Nick Twidale joining us from ATFX.